we're growing as a population, right? So even though we may see a 5% decrease in our usage of fossil fuels going to the renewable sector, if we're adding 2 billion people, what does that do to our growth in terms of energy fossil fuel needs for by 2050?
Hello, everyone. Timothy Nihill here, founder and CEO of Twin Shores Financial. Welcome to the Financial Freedom Podcast. First of all, thanks for joining us today. We have our good friend Nick White from U.S. Energy, which is an oil and natural gas company based out of Buffalo, New York, and Dallas, Texas. So, oil and natural gas and energy is obviously a hot topic given today's claims and I would say social agenda around going green and all that other fun stuff. But I can tell you from those that have grown up in the energy business, I think there's just a lot of misunderstandings around oil, natural gas, energy, electric, efficiency, and all that. So we're here to talk about that as a whole, but more importantly, we're here to talk about the opportunities that energy programs present from an investment management perspective and from a tax efficiency perspective, because if you're a high income earner or you need offsets to offset large capital gains, things like that, these are tremendous and can be tremendous opportunities that you may not be aware of that may be a fit for a tax or investment situation you're looking at. So enjoy the content. Thank you very much for watching. Like, subscribe, all that other fun stuff. And now we're going to kick it off to the podcast.
Welcome back to Twin Shores Financial Freedom Podcast. Today we have Nick White, who's the Director of Business Development at U.S. Energy Development Corporation. Nick, why don't you start us off by telling us a little bit about yourself?
Yeah, no, thanks, Alex. Thank you, Twin Shores, for having me today. Really excited about the conversation today on the energy markets. A little background about myself. I work with U.S. Energy Development Corporation. I've been here now for 12 years. My experience is really on the tax planning side of oil and gas investments, really figuring out how can we as a company construct different energy investments to take advantage of the tax arbitrages that the tax code allows us. But I've cut my teeth on the operational side as well, on the energy markets and where do we see things going and impacts of the renewable movement. So, really, really excited to be here and hopefully share some of my experience with those that view.
Yeah, we love oil and gas and the energy conversation's a lot of fun. I mean, I grew up in an energy family, natural gas family, so it's laughable when I see stuff out there. If you grow up with natural gas, you're going to get asthma. And I'm like, well, I ran marathons, so I'm pretty sure that's not the case. But yeah, I think, for us, we try to educate people and help educate people on, there's more ways to investing than just, putting your money in stocks, bonds, and cash. In fact, I was with a group of advisors this morning. We were talking about the rule of 72, right? You guys are familiar with the rule of 72?
No, not.
So if you take the number 72 and divide it by annual performance year over year, that will tell you how often or how many years it takes to basically double your money, right? So if you do 7% a year over year, you're basically going to double your money in 10 years. Make sense?
Mm-hmm.
The one thing they don't talk about is you can accelerate that, because if you manage your tax bill and use investment opportunities that are out there, you can actually accelerate that number. So there's an add-on kicker. And I mean, we've seen people double their net worth every 3 to 5 years, right? I mean, you don't really see that in the stock market. So, Nick, on your side, what are you seeing in the energy business these days?
Yeah, I mean, I think that you hit on a really good point, right? That law of 72, and it's a constant search for yield, right? And when you're seeing the current markets just in its entirety, right? What's happened with interest rates over the last year, right? They continue to go up. Things are getting harder and harder to find that yield. We really haven't seen that in the energy sector, right? If you look at the S&P over the last 2 years, the energy sector has been the best performing sector through and through, right? Compared to everything else. And, clients that are investing, and I think it's really all ways of investing in the energy sector, whether it be equities or MLPs or direct investments, you've really seen a nice bull run, start of a bull run in the energy sector, right? And, I think it all transpired coming out of the pandemic, right? We had a 2 year where we all remember being in quarantine, right? Basically, the demand for energy was at all-time lows because people weren't traveling. And then, coming out of the pandemic, just like many other industries, you saw the supply side of the equation struggled to meet the demand, right? It seemed like overnight, everybody started to travel again, and the need for oil and gas just exponentially increased. And it's really why you saw oil and gas prices jump to, oil 120 very quickly after that time. We do still see a really long bull run coming in the energy sector. I think you're probably at the third inning starting from that. And things have only really gotten a little bit, well, not a little bit, a lot more scary in terms of our ability as a globe to meet the supply needs of the environment, right? So, you're seeing a lot of geopolitical issues happening right now already that's reducing our supply. You have the Russia-Ukraine conflict that, Russia is a top 3 producer of oil and gas, right? And when you're talking about current energy demand need being 100 million barrels a day, and our inventories being so low and our ability to actually meet that demand need, anytime you're taking supply off the market, like what's happening with Russia, right? Developing nations aren't buying Russian oil. You're really starting to see kind of a future where energy pricing is going to be even higher than what we're currently seeing today at $75 a barrel. So it's a really exciting time, right? I think that we've seen a relatively flat market over the last 4 or 5 months hovering between 70 and 75 WTI. But all major banks, and us included, we really do project to see, closer to that $80 to $90 a barrel by the end of the year.
Wow. Does that have to do with OPEC cutting its production, like they said, I think it was last month?
Yeah.
As well?
Yeah, there's a ton that's going into it, right? I've been calling it a trifecta, right? You have the Russian-Ukraine conflict that we were just discussing, but, at the same time, we need more supply, and then OPEC comes out and cuts their production by 1.5 million barrels a day. Right. And then at that same time, you have the current administration here in the United States, which we can all agree on that, really hasn't been super favorable to fossil fuel companies. And they're really pushing this renewable agenda. So in a time where demand's at all-time highs and projected to be even higher as China's coming out of their essentially lockdowns, how are we going to meet those demand needs if OPEC's cutting production, Russian crude is being taken off the market, and the U.S. isn't producing as much? Right. It's a really, really scary time frame if I'm a consumer wondering, what the heck is my, gas price going to be at the pump going into the travel season in the summer?
Yeah, no one's even really talking about that, I don't think.
Nope. Well, and then it's interesting with the sanctions where you have countries like India and everyone else buying Russian oil and then selling it back to China and us and so forth.
Yeah. And what's crazy is that all that's being done at a discount, right? It's basically at the black market.
Correct. Yeah, they're making millions off of it.
So much money. And, they're really playing the long game on it. And they're going to end up being, winners within that scenario. It's
Was that Russia or India or China?
All of them.
all of
China.
it.
All of them.
Well, and I think, and we talk about that a lot too. Like, I think it feels like Americans, in a sense, are very centric focused, if this makes sense, right? It's all about the U.S., but what they don't understand is there's how many billion of people sitting on the other side of the world that have actually figured out how to leverage technology, and their economies are going through the roof, right?
Yep.
Like everyone here is like, oh, cryptocurrency is bad, for example. Well, in India, they have a UPI system where everything is on their phone, medical records, birth certificates, their investment accounts, bank accounts, their cash. They convert their cash into this UPI, and they processed over at least 1 billion transactions already. So it's almost like where the U.S. now is the checker player at the chess table. And now it looks like it's feeding into the energy industry.
It is in its entirety, right? Without jumping ahead, but just talking about this renewable push, right? When you're talking about being energy independent, right? That's what everyone wants to be. Right? We don't want to be reliant on other countries for our energy demand needs. With this renewable push that's happening, China really controls 75% of those rare materials that it takes to build batteries, that it takes to actually construct renewable sectors. And it's ironic to me that when you look at it, China's grid operates 70% on coal, right? So if they're actually 75% of the market, right, and producing these rare materials to actually build out renewable sides, why aren't they transitioning themselves? And it's a big reason is why it's a transition of wealth, right?
Because it doesn't make BlackRock money.
That's right.
It doesn't make BlackRock and Vanguard money.
It's so backwards. And I like to use the line, the path to hell is always paved with good intentions, right? There's good intentions there, but man, there's going to be a winner and there's going to be a loser, and I don't want to be reliant on China for our demand needs. So it gets a little bit scary from that side of the equation.
Wow. What do you think the biggest concern is in the energy business and the oil industry? Is it really this Ukraine thing? Is it going to get worse? Is it just how much change is trying to happen in the United States where they're starting to limit drilling and things like that? Like, what do you think there?
No, in terms of what we do, right, the limiting of drilling is only going to push pricing higher. So when you're constructing investments in the energy sector, higher energy pricing is great for current clients. I think where, the number one issue weighing on the energy markets right now is a fear of a recession, right? What is that going to do to the demand side of the equation? If we do fall into a deep, deep recession for a long period of time, based on what we've been seeing, we don't think it's going to be, a long-term recession. So we don't really see the fears of low energy pricing coming back in our scenario, right? Russia, Ukraine, we think that's going to be a prolonged process, or you're likely to see that continue for quite some time without any kind of resolution. But I would say that, the fear of a recession is the only thing that's really weighing on energy markets right now. I think, once the noise in the market kind of tapers off, but we don't see that we're not going to see a long-term recession, then, energy pricing should be trading in that $80, $85 per barrel window right now. We're at 72. So I think that's what's weighing on the market the most.
Wow, that's interesting. Yeah, I was just looking based on what we were just talking about. So in the United States, this is of 2023, on this world odometer, we have about 331 million people living here. And this goes back to the consumption, right? Okay, so China's 75% coal. China's 1.439 billion. And India, according to this, is 1.38 billion people. But at the same time, I heard there are now more Indians in the world than there are Chinese.
It's so true. And that's what I've been kind of trying to tell people is that, when you're looking at everything, it's a people problem, right? Population growth has been insane. We're at 8 billion people right now, and that grows by about 1 billion people every single decade. And so the narrative that I've been trying to talk to people about is it shouldn't be either or, right? It shouldn't be renewables is the answer and we can't have fossil fuels and vice versa. When you're talking about that population growth, we really need an all hands on deck scenario. Fossil fuels can't provide all the demand energy needs for a growing population, especially when you're talking about potentially 10 billion people by 2040. It really needs to be an all hands on deck scenario.
Right. No, and I think it's funny too, because you and I know this, and I don't know how many people out there know this or not, but they think, oh, I have an electric car and I just plug it in. Well, where does electricity come from? And it's basically you either have to create it from somewhere, from another energy source, or you need to get hit by lightning. Right? And so in order to have electricity, you can't just get it out of thin air. Unless you're Ben Franklin with the kite and the key, right?
Not only that, all the batteries, all these, like you were saying earlier, all these hard materials and natural resources that come in to make these electric cars and the batteries and all the wind turbines and all that stuff. I was reading an article. I don't think there's enough physical resources on the planet to have everyone to sustain 10 billion people, right? On renewables.
You just can't, right? And when you're talking about the actual process of building an electric vehicle, or even, here's a stat that I found out from a Texas professor, University of Texas professor, when he did the research. is that the actual building of a wind turbine, right? Wind is supposed to be one of the cleanest in terms of what we read and what we see in terms of their carbon emissions. The actual process of building a wind turbine, the amount of carbon that takes to build that wind turbine will never in its life, which is projected to be around 25, 30 years, essentially cut out as much carbon as it costs to produce it, right? So it's not really carbon neutral from that standpoint. Yeah, really, really, really interesting.
Right. And those windmills, they can't even power a 9-volt. What they did in New York State and Massachusetts on the Cape is just disgusting. Like, they're awful to look at. Like, you go down to Cape Cod and you want to see a whole scenery of just windmills, and you're like, what are we doing here?
And they're not really reliable, right? I lived in Fort Worth, Texas, 4 or 5 years ago, and I don't know if those listening actually, or you guys remember that terrible ice storm that we had, right? A big portion of Texas is powered by wind and solar, right? We didn't have power for weeks because the wind turbines couldn't even spin because it was just so cold and they froze over. And nobody wants to, go through a situation where you don't have energy for weeks, right? You don't want to have rolling blackouts from that standpoint. And so it has to be a narrative switch.
Yep. And it's funny too. Guess what they use to de-ice all the those turbines? Jet fuel, which is a huge CO2 emitter.
It is.
We're gonna title this "The Truth About Carbon Neutral."
Well, I was in Vegas last week, and I got an Uber for myself, and lo and behold, it was a Tesla. I was like, "What the hell?" All right, so this is going to be fun. The driver, he's like, "I'm never going to buy this piece of crap car ever." He had to get it because it was part of the Uber insurance deal, and he had to. That's the only car he could get.
Mm-hmm.
He said he pays more money charging his car than he uses on gas.
Yep.
I'm like,
Yeah.
he's like, I would never buy a Tesla ever in my life.
And it's
The other thing is, like, if you're in the Northeast and you get a winter storm, with the touch panels to open your door, those freeze over and you can't get in your car.
Yeah.
true. And a lot of people don't know this, but all those charging stations that you see, almost, I'd say a good 75% of them and 80% are powered by natural gas. It's like you're charging an electric vehicle with natural gas powered tent. It's insane to me.
Right.
Yeah.
Well, and I think if you want to really learn about the truth about Tesla too, just Google Tesla and Buffalo, New York, right? What was the name of that huge plant they built there with all the New York taxpayer money?
Solar City.
Solar City. It's completely abandoned. And every time you drive by, you might get a couple guys on the curb smoking a cigarette in front of it, but that's the only activity coming out of it.
Truly. I live in Buffalo, New York now, and they were touting that as a huge win for the city for years, right? And then it just opened up, and then it just sits abandoned. It's this massive factory. It's wild to see.
It's an eyesore.
Well, just give them a few years when they mandate everyone have to have those solar shingles on their house, and there you go. It'll be booming.
They don't even make solar panels. They're supposed to be for Tesla cars.
What? I heard he was making some solar shingles or something. Tesla was, yeah.
We say Elon Musk is a con artist. He's like the rest of them. But
Great marketer.
Great marketer. Right. I mean, he built a great car on the Lotus platform.
Yeah.
How do the US dollar and the oil prices go hand in hand? Like, what happens when oil prices rise to the US dollar?
Yeah, no, I mean, so commodities in general, right? And you guys are doing really great things with crypto, right? When you're talking about crypto and when you're talking about commodities and gold and oil, right? They tend to do very well in inflationary environments, right? So the higher the inflation, usually the energy price, oil price goes up with that because it costs more dollars to buy that single barrel of oil. So, I mean, with the level of inflation that we've seen coming out of the pandemic, commodities in general, whether it's gold, whether it's, in crypto, whether it's oil, they've all performed very, very, very well. So, going forward, I think it's going to continue that way. As clients look for yield, as clients look for a safe haven away from equity markets, commodities in general perform well.
Yeah. Well, and I mean, like, you get back to it and you talk about the demand of it. And then from a financial perspective, when you start to look at just the prices across the board and everything that's happening with, I would say, the financial engineering economy collapsing. I mean, you look at real asset prices and man, they are insanely cheap. And then you put on top of that this cycles of money over time in history, right? So everyone's like, oh, we're in a deflationary period right now. It's like, yeah, so you get inflation and then you get deflation, and then what's waiting is hyperinflation.
Yep.
And that is going to be like a massive boom. And it'll be interesting to see if it's a drawn out period of time or if it's just one of those where it just hits and rockets.
I think it hits and rocket.
I think so too. I mean, I think just everything that you've seen from the banking scenario, right, this year has been a little bit hectic. I think it rockets as well.
I think it's most of it's geopolitical, right? Dumping U.S. treasuries, the debt ceiling. There's plenty behind it to cause it.
Yeah, I think so. And I think, a lot of people aren't talking about this, but we're already obviously in an higher inflationary environment. And when you're talking about the energy and how that translates to it, the strategic oil reserve is a big question, right? We've been pulling millions of barrels of oil a day out of the strategic oil reserve. And how is the current administration going to replenish that, right? That's really designed to be a safe haven if the U.S. were ever going to wartime, right? If you pull millions of barrels a day off the market, what is that going to do to the current inflationary environment already? Well, it's disastrous. So it becomes a question. Are they going to replenish it? And how are they going to replenish it?
Well, he said 60, 68 or $65 a barrel is when he would replenish it after he sold a buttload of it to China.
Yeah. And that was the goal until OPEC said no way and decided to reduce their production by keeping energy pricing even higher, right?
Yeah, but don't worry, everyone in America. The United States government's very good with money. That's why your Social Security is not there, and that's why you have. Oh wait, there's really no debt ceiling issue here. But don't worry, they're going to replenish the strategic oil at some point.
Yeah. I think he forgot, right? OPEC nation, right? Saudi Arabia, OPEC, they're a lot different than the United States, right? We have a well-diversified GDP from different sources. Like those countries, it's really commodities, right? And so people forget they have these sovereign wealth funds that they operate their social economy off of, right? Their social programs, their economies, their growth, all relying on energy prices, right? We had 2 years of historically low energy pricing in the pandemic. So OPEC and Saudi Arabia, they need to replenish that sovereign wealth fund. They're going to do everything they can to keep energy pricing higher for longer, right? I don't think the Biden administration realized that. It's really, really interesting.
I mean, how can you not think of that?
He was making calls to Saudi Arabia and OPEC, and they weren't answering the call.
Yeah, they were laughing at him.
Yes.
Nick, you have this whole climate change energy debate, the move to electric. What's really the reality of it? Right? Like, I think any reasonable person understands that in order to have the energy that the world has, and there's still a ton out there that people don't even know about, right? They have one, I forgot what it's called, but they basically have a little box, right? It's no bigger than your desktop computer. And it's almost like a mining computer for crypto that is nuclear powered, and it can power your family for basically eternity. And if something happens to it and it has a meltdown, it doesn't harm the environment. I mean, people don't know that this stuff is out there.
No, they don't. And not to dovetail too much, but nuclear is the most efficient type of energy that we could find, right? And it's surprising to me that we're not investing more into it. I think that it gets a bad rap because of some of the issues that we've had in the past in the globe through history. But nuclear, especially with its carbon output, it's the most efficient energy source that we could find that currently stands today. But when you're talking about the renewable agenda, I'll go back to my original point. I'm not saying that renewables are not needed. We need all forms of energy to meet the population growth needs in terms of energy demand, but it's going to be a lot less of an impact on the hydrocarbon market than what people think. All right, if you just look at the stats, right? 85% of the energy demand needs on the globe come from hydrocarbons currently. right? If you look at the base case scenario from the EIA, which is the the Energy Information Administration, the base case has that at 80% hydrocarbon in 2050. That's a 5% decrease in terms of our reliance on fossil fuels. And when you're talking about that time frame where we're going to increase population, it's expected to increase by 2 billion people, that gross number of fossil fuels needed remains the same, if not goes up, right? So the impact that it's going to have on the fossil fuel industry is going to be very, very minimal in terms of what we need. And I think people forget about what petroleum-based products are used for, right? It's not just for filling your car up at the pump, right? Petroleum's used in almost all electrical components, right? Almost all medicine uses some sort of petroleum-based product within it. We're always going to have a need for fossil fuels. That this whole EV conversation doesn't really become as much of an impact as we thought.
Well, I mean, you still need tires on your car.
Yeah.
Unless we're going to go to flying vehicles. But I don't want electric because if that battery dies, I don't. Rugs, right? Rugs,
paint, tires,
hair gel too, right?
Literally, I
always
always
see your clothing too, I think.
Yep. Literally everything that we use on a daily basis that we take for granted, we don't understand how much petroleum-based products we use in our everyday life.
Yeah. Right. Gasoline, chapstick. Very interesting. So you said based on those stats, there's going to be another 2 billion people in the world. So we're going to break what, 10 billion?
Yeah, I mean, based on current, like the real issue, again, going back to it, it's a people problem, right? Population growth continues. We grow by about 1 billion people every single decade over the last 20, 30 years, right? When you're talking about people are living longer, right? The average lifespan has grown tremendously with medical enhancement and technologies. You know, we're growing as a population, right? So even though we may see a 5% decrease in our usage of fossil fuels going to the renewable sector, if we're adding 2 billion people, what does that do to our growth in terms of energy, fossil fuel needs by 2050, right? It just gets a little bit scary. And what scares me even more is if we just black market the fossil fuel industry, we don't have capital infusion going into it, you know, we're going to see our production numbers as a globe dwindle. And if supply dwindles in a time where we have continuous demand exponentially increasing, what does that do to oil and gas prices going forward?
Right. Well, yeah, I didn't even think about that one.
We could see it even just this year alone, right? The EIA is projecting that we have 104 million barrel demand by the end of this year, right? Currently, we're producing 100 million barrels a day. OPEC's been pretty public about that they have a 2 million barrel a day capacity. We can only get to 102 million barrels a day in terms of production, and we have 104 million barrel per day need. That gets really, really, really scary in terms of where, again, energy pricing could be by the end of this year.
That should be pretty interesting. Yeah, and I almost feel like when I look at it, it's hard. Like, we can't do this because obviously we have our clients and we have to operate within reason.
Yep.
And the fiduciary standards that we operate at. But it's like you almost, or if you're at a poker table, you're kind of going like this with a lot of chips.
Yeah, no, it's a great time, right? Like I said, I think we're at the second or third inning of a nice bull run, whether it's oil or gas, right? We're very, very bullish on natural gas as well.
Energy and commodities and energy. Yep. No, that makes a ton of sense. Now, the other thing too, I don't think people maybe understand is, I think you have the perception of what oil and gas drilling is versus what it actually is today. Can you talk a little bit about the process of drilling wells and how you guys are doing carbon offsets and all that fun stuff?
Yeah, I don't think that's being talked about in the news much, right? At all, right? You're seeing everything talk about renewable advancement, right? Technological advancement on that side. But, you know, being boots on the ground, right, in the oil and gas space, there's been a massive transition in terms of technological advancement in oil and gas companies' ability to have carbon capture, right? Whether that be not flaring, right? The biggest contributor to oil and gas over the years has been flaring natural gas. Like if you're drilling oil wells in the Permian Basin or Texas or even North Dakota, when natural gas pricing was so low, it made more sense for you to burn it off on the wellhead as opposed to actually tied into a pipeline and actually realize the revenue from that, companies would just flare off natural gas. And now you're seeing the Texas Railroad Commission come in and actually curb the amount that companies can flare. And, our company, we have 0% flaring, right? We built out pipelines. We spent the money in building out pipelines to even capture the natural gas. And what companies are now doing too is they're using that natural gas. Say it's not like the wet gas is not profitable because it's spot price. They're actually using that gas to power generators on the actual oil and gas drilling sites to utilize that and reutilize that instead of pushing that out into the atmosphere. So
And they mine Bitcoin. They mine Bitcoin with it.
they do.
Yeah.
A lot of companies are using it to mine Bitcoin as well. So it's reusing a lot of the resources and the efficiencies.
The process has become renewable.
Yeah, it's become so much more efficient. Even over my 12-year history in the space, the last 4 or 5 years have just been transformative in that ability to capture that carbon.
So down in southern Texas, you have the Permian Basin. There's Eagleford that's down there, right?
Yep.
From what I've heard and have read, there's more oil and gas in Texas than there is in the entire Middle East. And to the point where you could have 10 Dubais in Texas versus one Dubai in the Middle East. Is that pretty much accurate?
Yeah, it's pretty accurate. And again, we're finding new reservoirs every single, year. We're finding new areas that are productive in drilling. And as technology increases as well, it's only going to increase the amount of production and reserves that we find. So there's a reason why almost 90% of the oil and gas production is happening in the Permian Basin, West Texas. It used to be when I first started, you saw a lot of activity in Oklahoma in the Scoop and Stack. We all remember the Bakken, right, in North Dakota. That was a really big, name where drilling started to happen. But over the last few years, really most of the activity is happening in the Permian Basin in West Texas. And big reason is that it's the lowest cost to drill. When you look at the rig counts are highest in Texas, so it's very easy for you to get access to rigs. From a time frame standpoint, you can drill a well in 30 to 60 days. And actually transporting your commodity to market, right? You have built out infrastructure in Texas where you're using pipelines to transport it. Conversely, up in North Dakota, they're still using train and rail to get their commodity out from their well site to market, which makes it more expensive. So lowest cost to drill, easiest to transport, and it's a stacked play, right? You think of it like a layered cake where the Permian Basin, you have the Wolfcamp A, B, C, D. There's just a lot more productive zones within a shale play than, say, the Scoop and Stack or the Bakken.
Yep. How far down do wells typically go?
Yeah. Well, it depends on the region, right, and the technology, but on average, you're seeing it between 10 and 12,000 feet down underneath the ground. And then you can drill laterally now about 2 miles long. So every well, you can have a 2-mile long lateral. That's the type of wells that we're drilling. And those wells are costing us anywhere between 12 and 14 million, but they're so deep and you can just have such long laterals now on a well.
Oh, that's pretty incredible.
Yeah. And what's crazy about it is, we have guys that can stand 12,000 feet above the ground. And when you're controlling a drill bit that's going in between all those stacked plays, you get the data back after you've actually completed that drilling process. And it's within centimeters, right? Based on where their projected path was, within 2 centimeters, they can keep it all the way through on 2-mile long run. It's amazing.
Right. And I think I was reading recently to put this in perspective, right? Because lithium is a big deal for electric batteries. And we'll get off the electric battery bashing in a minute. But they have to drill down just as deep, if not 2 to 3 times as deep to get lithium. And they're doing all the drilling in the ocean. So probably not a good idea to monk with the oceans.
No. And honestly, it's hard, right? The average permit, it takes you 16 years to get the average global permit for mining raw materials like lithium, 16 years to get a permit. It's a long time to be doing, and it's so intensive. You're talking about using a ton of water to actually go out and mine those raw materials. So the impact to the environment, I don't think is being talked about enough. And again, not to get on the renewable soapbox by any means. Again, we need all forms of energy, but the process that it takes to actually mine these materials is also very, very intrusive to the environment.
Right. How much profit usually gets produced based on the wells in Texas are you seeing?
Yeah. So, I mean, every company has different break even price, right? When you're talking about lifting costs versus break even costs. So, what a company like us will do when you're actually out there drilling those wells is you'll take a look at the production volumes, the reserves that you're expecting, and you'll extrapolate that over the life of a well. You look at the average cost it takes to drill, which can come in at $10 to $12 million, can vary based on, the raw material costs and everything. So our break-even point on our assets is right around $40 to $45 per barrel. So every barrel that we get out, oil is trading at $72 a barrel right now. You're talking about a $32 profit margin from that standpoint. You're seeing, even at current energy pricing, 70s, this is a sweet zone for oil and gas, right? Because at this price point, you're not being charged premiums on actually drilling those wells. Like service providers like Halliburton or Schlumberger, they're not going to really rake you over the coals for materials and getting access to them and drilling those wells. When oil gets up to 100 or 120, you usually start to see that break-even cost jump because it's going to cost you more to drill that well. Right? Halliburton's going to charge you more because their services are in more demand for drilling wells. So this $70 to $90 price point, if this could just stay flat, you'd see efficiencies from oil and gas companies, and you'd get such great returns based on your ability to keep those costs low and realize those kind of profits.
Is it?
Look at this time around last year, it was $110, $118.
Yep.
You think it's going to go back up anytime soon?
Yeah, I think so. I don't think it's going to rubber band back into the 100 to 110 probably by the end of this year. But when we talk about everything happening geopolitically, like we talked about earlier in this call, most of the major banks, whether it's Citigroup, Goldman, they're all projecting, between $85 and $90 a barrel by the end of the year. I think that continues going into 2024. 2024 is likely when you're going to start to see $100 a barrel. A lot of it depends on, the timing of when they're going to refill that strategic oil reserve. Right? If they start to replenish that and that comes into fruition, you may see $100 a barrel by the end of the year. But I'm a little bit more conservative by nature. I'm targeting 2024 for the $100 mark.
Good time to get in is now.
Yep.
Yeah.
Now, Nick, let me ask you this question. We drill oil in Texas, which, can you imagine if we could have 10 Dubais in Texas? Like, you want to talk about balancing a budget and refunding Social Security and replenishing it? Hello? Like, let our Texas boys go to work, please.
Yeah.
So, with what we extract in the United States, if I have the understanding correctly, it doesn't necessarily translate into gasoline being used in the cars, right? We mostly take our oil and ship it overseas and then use oil from overseas and ship it here. So then we can power our homes, vehicles, and all that stuff. Is that pretty accurate?
Yeah, somewhat, right? During the Trump administration, we were energy independent for a while, right? The current U.S. production is hovering around 12.3 million barrels a day. We're definitely not near pre-pandemic levels by any means. So most of what we produce here, we try to use, right? We're still importing quite a bit in terms of the recent administration, right? During the Trump administration, we were exporting quite a bit. After what transpired with the pandemic and the Biden administration, we are starting to import quite a bit more. From a natural gas standpoint, we were exporting quite a bit. Last year was the largest in terms of exports on LNG, liquefied natural gas, that we've seen in the United States history. I think that continues, especially with what's transpiring in Europe, right? You saw all the news articles about what people were paying for electric bills over in Europe, right? I think the United States continues to export primarily over to Europe, liquefying natural gas and sending it over.
Europe's a great place to visit, but not to live.
I felt bad for them. Like, I'm in Buffalo, New York. I know you know that, Tim, but I thought my my gas bills were high during the cold Buffalo winters, but I couldn't imagine paying $15 an MCF like what they're doing in Europe, right? Struggling to find out if they should cook or not. That's a little bit scary.
Yeah, you want to talk about going back to the ice ages. It's like, what are we doing here?
Yeah.
And I laugh at it. I tell it basically like, I mean, you're getting this push and an agenda for people that can't even pass a high school science class. Yeah, I'm a little snobbish on that one.
No, I love it.
Oh, that's so comical. So what do you let's go to talk about investing, right? The different ways to invest in energy. You mentioned MLPs before, direct investments. Like maybe help people understand different ways that they can implement the commodity and energy exposure into their financial portfolios.
Yeah, I may be biased, but I think, based on everything that we've just discussed, the energy sector, just in general, I think is a really good place to park capital here this year and probably going forward. There's a lot of ways that you can invest in the sector, whether that's through equities, whether that's through MLPs, whether that's through the direct side. With equities, a little bit more liquid, right? You have value and growth opportunities. We do think that stock prices for public companies, Exxon, Shell, whoever it may be, will continue to grow, even though they're at all-time highs right now. MLPs, the one thing I will say to be wary of when investing in oil and gas is you really want to make sure that the balance sheets look right. And what I mean by that is you really want to make sure that a lot of these companies don't have a ton of debt on the books. Oil and gas historically has been funded by debt, right? When you're talking about the ability to get access to capital, go out and acquire assets, to drill wells, like with an MLP, what they'll do is they'll take on a ton of debt, gobble up a bunch of acreage positions, drill those wells or already producing wells and have a high yielding cash flow coming to you through that. But with the current interest rate environment right now, that seems to be a little bit scary. On the same side of the equation, a lot of the major banks have paused the amount that they're lending to fossil fuel companies because of this whole ESG movement. So just be wary on the amount of leverage that a company uses. If I were to play the space right now, I'd probably go on the direct side where you're investing into a limited partnership or that actually goes out, drills wells, and you actually have direct ownership in those assets. A lot of these companies that do that, they don't use any debt, right? Your returns are going to be based on the production volumes from those wells and the fluctuation in energy pricing. Being the fact that we are bullish on pricing, I think that's probably the most optimum way that I would enter this space.
Yeah. And then on the direct ownership side, I mean, there are tax efficiencies to the investment, right? There can be.
Yeah, no, there certainly can be, right? IRS code 263C, right? Clients that invest directly into energy assets, whether oil or gas, are able to deduct their share of intangible drilling costs in the year incurred. So if I'm a wealthy client looking for tax planning, right, if I can marry the tax planning element to a really great, reasonable rate of return, then that type of investment may make a lot of sense for me as an above the line deduction for my taxes. And then a diversified asset class that's kicking out really strong returns makes a lot of sense.
Right. And for viewers out there, there are programs out there where you can deduct 80 to 92% of what your initial investment is. So like if you're a high income earner and you're looking at these massive tax bills, like when you're making $1 million, $2 million, $5 million a year, it's like you start to look at the check you're writing to the government and you're like, what are we doing here? And the single greatest thing we talked about is the acceleration of that rule of 72 is the more cash I can keep in my pocket, the better off it is going to be in terms of building net worth, right? And then like people don't understand, it's when you think about money, like I'm not thinking about just for myself if I have a family. I got to be thinking about, hey, is there a future for my kids, relatives, and other people?
It's a really great point. I love how you tied that back into just with that law of 72 and pushing that forward. I think that's a really, really great point.
Yep. Yeah, we like tax planning and tax offsets. And like in Texas, I don't think a lot of people understand, like there's a lot of development going on there, but there's also a lot of conservation going on down there too. Right? So you can have these you can have these drilling sites and still have plenty of land that's perfect for nature and they can live in harmony side by side.
Yeah. No, I mean, I think that gets overlooked quite a bit, right? The amount of microscopes that we operate under, right, in terms of legislation, there's a lot. Right? And so when we actually go out and drill a well, after that well's been depleted, we have to make the land exactly how it was prior to that drilling process, right? So conservation happens all the time. Just that I don't think people talk about it enough.
Interesting. I didn't know that.
Yeah, we're forced to.
So what do you see, what do you see happening over, let's say the next 5 to 10 years in the oil industry? How's it going to change operationally, and what should we or could we expect here, at home in the States?
Yeah, no, I think that like I said, we're in the start of a bull run. I think we're the second or third inning, right? Energy markets tend to move in super cycles, and we're really at the start of that super cycle currently. If we don't start putting more capital into the space, then it gets really scary in terms of higher energy pricing for longer, right? We need to be out there drilling more wells. We need to have capital infusion going into the energy markets, oil and gas. I don't think that's going to come. I think that the renewable agenda is going to continue to receive the majority of capital, whether that's through the government or whether that's through publicly traded oil and gas companies, right? You're seeing Exxon, Shell, BP almost forced to position quite a bit of their budgets over to the renewable sector. And what they've found is that if they start to do that, it's almost backwards right now. If I'm an oil and gas company and I drill a well, Exxon, my stock price goes down. And if I'm a CEO of a publicly traded company, what's my overall goal? Is to keep my stock price up for my shareholders, because that's selfishly how I get paid, right? So you're starting to see this scenario where a lot of capital is being used to increase dividends, issue stock buybacks, push it towards renewables to keep their stock price high. And the lack of capital spending going into the space is scary, and we're likely to see a higher energy pricing for longer.
What do you think that means in terms of price?
Yeah, it's hard to say, right? I think that we're on an average price environment in that $75 to $100 range going forward.
I think it affects the price at the pump a lot.
Very, very much so, right? The higher the oil price, the more you're going to be paying at the pump. I think we're going to see it this summer, right? As travel season comes up, oil inventories are the lowest that we've seen in decades. Kids are getting out of school now, right? We know that. Travel season's coming up. We're already struggling to meet the supply needs. I think that coming into the summer months, you're likely to see higher gas prices at the pump, and probably for the foreseeable future.
Yeah, and I think the funny part about it is that everyone wants a utopian system until they see what it actually does and how it impacts their life and family. Right? It's all great until it hits home.
Yeah. Nobody wants to live in rolling blackout scenarios, right? At all.
Can you imagine people here if we started to get rolling blackouts? Like, I don't understand how Europeans put up with it.
So it started in California. Well, they're starting to do it here in the energy sector too. I guess there's a lot of programs for your AC and whatnot here in Texas, they want you to opt into where they control your thermostat. Like, set your thermostat to 80 or 78 degrees and save money. It's like, no, I don't want to be in an 80-degree house. Like, that's ridiculous.
Right? Can you imagine if you have a rolling blackout and it's 110 degrees outside?
I don't even want to think about it. My AC went out last week and I had 3 days of sitting in 80-degree weather in the house. Luckily, it was cold and rainy outside and only 70 degrees, so it wasn't that bad, but it gets muggy, stuffy.
And God bless you.
Right. And then you look at the demographics with how many, like the population shift. There's so many people moving south, right?
Yep.
Like, we now have our office in Florida. And it's just one of those things. He's like Gretzky said, you got to play to where the puck is going, not to where it is right now.
Yep.
Awesome. Well, Nick, let me ask you this question. What are the risks and concerns getting in and being in the energy business?
Yeah, I think it's different for the avenue that you invest in, right? I think the overall underlying risk that I think everyone can agree on is commodity price risk, right? There's a lot that companies can do in terms of controlling where they operate, the type of drilling that they're doing, whether it's developmental or exploratory or wildcatting. The one thing that we cannot control are the underlying commodity prices. So you're looking at, say, on the direct side, an investment in the energy sector, you really want to be comfortable with where energy pricing is going over the next, call it 4 to 5 years. From an equity side, right, it's a little bit different, right? You're looking at their ability to grow their reserves, what their stock price is doing, value and growth. So I'd say the two issues, the risks that I would pay most attention to is the type of asset, whether it's direct, and if you feel comfortable with that commodity, whether it's oil or gas over the next 4 or 5 years. And then going back to my original point, the balance sheet, right? How much debt are these companies taking on? What is that impact to their balance sheet, especially in a higher interest rate environment?
Right. And I think I think the energy sector is interesting too, because if you are abundant in energy and oil and gas, it translates all the way down the line to lifestyle, right? Right. What's the number one country in the world for lifestyle? It's Norway. And what does Norway live off of? Oil.
Mm-hmm.
Right? Yeah. I mean, can you picture in the United States that has like, if you turn Houston, San Antonio, Austin, Dallas, Fort Worth into Dubai's? Can you imagine the economy that comes out of that?
Just the amount of jobs too, right? The amount of jobs, like there's such a flow down of an impact that is all positive in terms of what we want to do.
Well, that's a good one too. So, I mean, the big hot topic right now people are talking about is artificial intelligence, right?
Yep.
What people don't understand is the government's been using artificial intelligence since the 1950s. Like this is not a new topic. How do you see that type of stuff and the adaptation of technology impacting the industry?
Yeah, I mean, I think it's relatively new for our space, right? The government's been using it, but the ability to have widespread access is still relatively new. In terms of our industry, you're likely to see even more efficiency, right? If you can add in the fact of artificial intelligence, and I think there's a lot of really intelligent people in our industry, but it's hard to beat out a supercomputer when you're talking about just knowledge base. And so I think the addition of that, you're going to start to see companies utilize it to create more efficiencies on the production side, whether that be reducing costs to drill wells, whether that be having more productive wells per square foot that they're drilling, whether that be through having more accurate predictions on their decline curves and their commodity splits, right? So I think that it's only going to be a benefit, and you can even use it on the carbon capture side for oil and gas. So I think that you're going to see a widespread adoption in our space, and it's going to be a positive impact.
That's awesome. Yeah, so it'll be cleaner, more profitable, and more efficient.
And that's where we're moving, right? We're moving towards being a more efficient, environmentally friendly space, right? Nobody wants to think of oil and gas being environmentally friendly, but again, we've seen such a transformative change in the last 5 years on these style of companies, fossil fuels, being able to be much, much more efficient and reduce their carbon footprint.
Right. At the end of the day, it always comes back to fire.
That's right.
That's awesome. Well, Nick, if you had any parting words or advice for people that haven't been familiar with this or want to look at this type of stuff moving forward, what would you share with them?
Yeah, I'd say by working with a great team that has access to these type of investments, the Twin Shores, Tim, Alex Venci, you guys have always been great. I think that you guys do a really great job on education and understanding multiple industries and talking about where do we see the opportunities, where are the risks. So I think the biggest thing that I could say is working with a great team like Twin Shores is probably the best way to get access to these type of investments, and even that, just having access to education and knowledge, right? Knowledge is king.
Right. Yeah, that makes a ton of sense, and thank you for that. We appreciate it. Well, and part of it too is like I said before, you grow up in the business, right? And you understand the realities of what it is versus what people say it is. And I think, when we look at things from the financial perspective, and you touched on it before, it's freaking frightening. Like this financial system we currently have it's cracking, and it's cracking in a hurry. So, we just see that there's going to be this massive transformation there, and oil and natural gas are definitely going to be a big part of it.
It's a great point. And they're likely to see bull runs in both, right? I think energy trend, like what's happening in the energy sector, just having access to it, and taking a look at it, I think is going to only be a benefit for clients going forward.
say we drill, baby, drill.
Drill.
So, Mara, you have anything else for Nick? Any questions? You gonna go to a Bills game recently?
Yeah, no, I mean, I went to a few last year. I'm on the cusp of getting season tickets for this year. I thought last year was the year, man. I did. I got heartbroken in Cincinnati during the playoff game, but I'm hoping we have a smaller window now to win a Super Bowl. The city will burn down if we win a Super Bowl. I can tell you that.
Yeah, typically
It'll burn, but we're definitely gonna have a good time.
We're due, man. We're
Oh.
due.
Where's the new stadium being built?
Right next door.
Oh.
Right where Tim. I think Tim, your parents are in Orchard Park, right?
Yeah, my brother's in Orchard Park. My parents are in South Buffalo, so it's like right around the corner. They did break ground a month or two ago.
Mm-hmm.
So I'm still, I don't know. I saw some stuff with Coach McDermott today. You're seeing the Josh Allen stuff. I don't really buy into the Dig stuff. And then you just hear some of the more things that happen behind the scenes, and it was like, man. But the thing I don't think people talked about is they lost some massive, massive players on the defense last year.
Yeah, just Edmonds alone, right?
Right. And then they lost him to injury last year too. Like Phillips wasn't playing, and then there was another guy who got injured, who was he's a beast on the line.
Yeah.
Yeah.
Getting that secondary back is going to be huge for us, right? Having Micah come back, Poyer, Trey Davis White, and Kyer Elam coming back. I think that we should be pretty darn good this year. I think the AFC, though, when you look at it in the grand scheme of things, is getting tougher and tougher.
It is. It's getting hard. I mean, look at the Jets are loading up. The Dolphins are already really good.
How come the Bills aren't building a dome? Like, why it snows so much there, and why you're building a brand new stadium and you have it makes no.
No, we are not doing a dome in Buffalo, baby. Get outside.
It's a good question. I kind of question that too, but I love being out there in the snow. It's just, Buffalo is a blue collar city, right? We love that. We love that fight. We love being in the elements. The one thing that I wish would change a little bit, but it just probably would have been more difficult, is if it was closer to the city. Right? Orchard Park, I love having it there. You're 20, 30 minutes away from the city. But if it was in the city, man, I would have loved it.
Yeah, that's the only issue. Like, where would they put that stadium?
Yeah, it would have been way too difficult, right? And a lot more intelligent people are making that decision than myself, but I'm sure they did a cost analysis on it and said, hey, Orchard Park is the spot.
Yeah.
Also, I don't think downtown Buffalo is equipped for the amount of people that come in and out for the games, right? The streets would be hectic, and I don't know.
Tim, you go to a Buffalo Bills game in Orchard Park, you're sitting on Southwestern for a good hour trying to get out of the game.
That's why you're going 2 days before now.
Yeah.
That's why my brother's lucky. If it's nice, he can basically walk.
I got to text Mark. I need to get some spots over there.
Yeah. No, we're keeping this segment. We're gonna do a shout out to Bills Mafia today.
I love it.
I still have a hangover, I think, from that Cincinnati game. That one as a fan hurt. I mean, outside of being a fan, I really don't have any investment in it.
Right.
So it doesn't hurt that much, but I don't know, man. When the Bills run in your blood, and same with the Sabres, it's just one of those things that it's in your blood. So
it is. The city revolves around those teams, right? Doesn't matter. You see it on a Monday, right?
Yeah.
The Bills lose on a Sunday. A lot of people aren't showing up for work on Monday, or
Right.
it's just really, really, really quiet in the office. No one wants to talk about it.
right, yeah, it's a different mindset. Like if the Patriots lose, nobody in New England really cares, right? So, and then even like, congratulations to the Florida Panthers, and you look at Reinhardt and Montour, and you're like, I hope those guys win the cup. Sorry, Eichel, you wrecked my children as a fan. I can never forgive you for that. And
Blast that one out on Twitter, wherever.
yeah, blast that one on you. You just my oldest son, who's a massive hockey fan, you broke his heart, and I'm sorry. however it happened, and it's probably to blame on both sides, and that's why we had such an issue with the previous powers that be. But that one hurt.
If he came to Buffalo, he could walk on water. He could do no wrong.
Yeah. So awesome. Well, Gavin, or anything we need to do to close it out?
Thank you, everybody, for tuning in. And next week, if you're looking to become more financially free and learning more about finance, please like, share, follow us on all our social media platforms. And thank you again, Nick, for joining us.
Yeah. Thank you, guys. It's been a blast. Look forward to it again soon.
Yeah. Thanks, man. Appreciate it.
Thank you.
Anytime. Talk to you guys soon.